Hello financial investors and welcome to the channel. My name is Brent and today we're going to be doing our M1 Finance stock market buys here within our Roth IRA on the 21st of September 2020. It is the final full week of September, with next week just being 3 days, and then we're already in October. It feels like this month has been going by really quickly, but that's just how it needs to be with 2020. This whole year just needs to be completely over and done with. Let me know down in the comment section if you agree. Either way, in this video, we're going to go ahead and take a look at stock futures, which are up on the screen now. Then we're going to go ahead and talk about the M1 Finance portfolio, the activity overall. How's the portfolio doing? Is it positive? Is it negative? Take a look at the 1 week performance of the portfolio in comparison to the three main indexes. Take a look at the activity for this past week. What stocks did we get? What dividends did we get? We did get quite a few dividends. I'm going to go ahead and also showcase how many dividends that we have received here in September. It is so far, I believe it's the highest paying month that we've had on this M1 Finance account. This portfolio is about 2.5 years in the making now. It's my wife's Roth IRA, so it's definitely chugging along very nicely for her. So that's what we're going to be covering in today's video. If you are brand new to my channel, have not yet subscribed, definitely go down below, hit the red button, make it gray, subscribe to the channel, then hit the bell to be notified every time we release a new video. And of course, give this video a thumbs up, make it blue, and let's go ahead and get into the video. So today here is the 21st of September. Right now, stock futures are showing negative at the moment, and this can all change. It looks like it's accelerating here. We were just at 1% down for the S&P. It is now at negative 1.06. We have the Nasdaq down 1.92, the Dow Jones down 1.68. So kind of interesting to see the S&P 500 be further into the negative versus the Nasdaq. So maybe there'll be some tech stocks that are holding the Nasdaq higher versus the S&P is being dragged down by the rest of the stocks within the S&P 500 there besides the tech ones. And the main reason for what is currently happening, we've had, I believe, 2 weeks now of negativity out here in the market. Stocks have just been falling, and a lot of that really hangs, and what we're trying to do is come out of this illness, this pandemic that we've been having, with some sort of recovery actually moving forward. Right now there's really no plan in action as far as being able to recover. There's job numbers are actually coming in, the unemployment claims are coming under what is expected, but there just isn't that boost to the economy of actually getting more jobs out there. There's people that have jobs, but they're not going into work and getting hours, they're not getting paid. So there's a lot going on right now, and that's definitely affecting the market overall. So with that whole business there. Now there are a few markets overseas that are open. We have England that's currently open, down 2.64%. We also have Germany overseas open, up down 2.27. So both of those markets are down over 2%. We had Hong Kong here that I believe it was open. It is currently 1:18 in the morning, so this one looks like it's open. I thought I just saw it move, but this is not showing that it is open and active at this moment. So kind of interesting there. So we could see the US markets here on Monday be down possibly over 2%. I guess we'll just have to see what sort of news comes out there. Of course, here on this YouTube channel, we talk about the stock market, we talk about dividends, we talk about real estate occasionally. I am going through the process of buying a brand new home, so if you guys are interested in any of the details, if you guys have not bought your own home, if you guys are interested in the process of buying a new home, looking for a home, definitely let me know down in the comment section. Now, logging into the M1 Finance portfolio, this is my wife's Roth IRA. It's been active since January 8th, 2018. So actually we're almost at a 3-year mark. A couple more months, I believe it's 3 more months, and we're going to be already in January of 2021. That'll be exciting. Now overall, this portfolio is up pretty nicely. We've gained roughly $2,660. Half of that comes from market gains, and the other half, the majority of that half, comes from just dividends that this portfolio has been producing. January or 2018, I believe that was a pretty flat year. 2019, we picked it up towards the end of 2018. It really escalated into early 2020, and then 2020 hit. We had March. The stock market collapsed by, I believe it was 20-30% in that range. So it's been a really up and down market these past few years. So just to have any sort of return when you're not investing in Tesla, Apple, or those other crazy companies that are out there, this is just a very mild, very chill dividend style portfolio that produces dividends and has those dividends reinvest back into itself. So we do have $86.50 sitting in cash. And let's take a look at the 1 week performance. Of course, if you guys haven't already signed up for M1 Finance, if you guys have been interested in M1 Finance but just have not taken the plunge, right now they're doing a special offer. They're offering $20 for a referral and $20 for the referee. So if you guys sign up down in the description down below in the comment section, there'll be a link to sign up for M1 Finance. It's still a great platform for brand new investors, completely free, automated investing where you set up your portfolio, you set up your funding schedule, and you can do all of that by selecting the auto invest button. It just puts your capital to work automatically for you. So definitely sign up if you guys would like to check it out. Now, overall, we can take a look here that our worst performing companies, this is kind of the area that I like to look at, which of my stocks are actually not performing very well. We have our real estate investment trust within the retail sector. So Simon Property Group, Tanger Factory Outlet, they are beat up, man. Simon Property Group down 72%, Tanger Factory Outlet 46%. Then we have oil, Chevron. We have another retail, Walgreens, Waco Group, another retail, Altria, sort of in that consumer, it's more of a scent stock, it's cigarettes and alcohol. So that's down 27%. And then from there, it's really not too bad, a couple 20s. And then it really just pops up higher from -11. And then it just moves into straight green. So our best performers out there are Apple, Lowe's, ABM Industries, Main Street Capital, and so on. So kind of interested in the negatives, what's going on with these companies. And of course, it's been the retail complex. The illness has been going on with shutdown everything, made employees, basically take unemployment. Malls have been forced closed. People are wearing masks. It's been a really crazy year. So we'll see how long this sort of persists. I don't see these stocks really having that effect long term. It's a short term madness that's going on with these companies. So at time, I just kind of buy and hold, and with time they'll recover. And I'm always adding brand new capital into the market, so I'm able to average down these positions when I feel that there's recovery, and then I'll make a bigger return on the upside eventually. It's all eventual, and that's fine. I can wait there. It's not too much capital being invested in these ones. Okay. And that's our overall portfolio. So let's look at the 1 week performance. Let's go ahead and uncheck that. And overall, for the 1 week, we are up 0.58%. Some of that, $120 roughly, is from market gains. Another $23.77 is from just dividends that are being earned, meaning that I sat through some ex-dividend dates this week, and that I earned $23. And I have not yet been paid them out, but I will get paid them out here in the future once those dividend stocks hit the pay date. So overall, pretty positive for the 1 week. If we take a look at the actual market themselves, the S&P 500 is down 0.64%. The Dow Jones is flat for the week, negative 0.03%, and the NASDAQ was down 0.56%. So for our portfolio to be up by 0.58% in the same week here within the time frame of September 14th through today, that's pretty good. So our best performers were, of course, those stocks that have been actually really beat up in our portfolio because we chose not to sell them. We didn't panic sell. We're still holding through these through tough terms. Tanger Factory Outlet, I didn't capitalize, or I didn't, take that. I didn't lock it in. When you actually sell, you lock in those losses until you actually click that sell button and submit. You don't lock in those gains, you don't lock in those losses. So last week alone, this one went up 16.15%. Simon Property Group went up 8.85. Those are my two biggest losers, and last week they were my two biggest winners, bringing the portfolio to the upside. Cisco Corporation up 8.56. ABM Industries, another massive 6.52. Walgreens, that was one of our losers. So I do have a couple of losers in my portfolio overall up at the top for this past week. So it's really nice to see that some of our worst performers are actually doing really good in the market when the rest of the market is not doing so good. And our worst performers, Altria, kind of interesting, Las Vegas, Apple's been doing pretty negative, along with, I believe Apple has gone some 20 some percent since its stock split to the negative, so it's kind of interesting. Kellogg's, WP Carey, I almost said Walgreens. We already saw Walgreens down here, I thought somewhere. Oh no, it's up towards the top. So just a good little mixture there. And between all that, we're still positive in the week. Now, if we jump over to the activity, what sort of activity have we had? And we have actually had quite a bit of activity here, starting back on September 1st. I don't think I made this sort of in my last video, so we'll quickly go over the dividends that have been paid out. So back on the 1st of September, we were paid out by Fiserv. Then we've had a massive amount of dividends get paid out here in the month. We've had Johnson & Johnson all the way through Walgreens, 3M, Constellation Edison, Kellogg's, and so on. So we have had a ton of dividends. I'll actually add these all up. I have them already in my spreadsheet. We'll just take a look quickly. And I've only made one stock buy this month because back in the earlier weeks of September, about 2 weeks ago, we had a massive fire here in Oregon. 2 of our cities burned down, Phoenix and Talent, Oregon. I had 2 or 3 different fires. Well, actually, I think it was like 4 or 5 different fires within a mile of my home that were just started and put out. So it was a bit of a crazy week, and these last 2 days here have been actually pretty sunny outside. The smoke kind of got blown away. We had a bit of a rain that helped some of the ash and smoke kind of settle down, which has been really nice. So jumping back here, again, we made that one stock buy. That was Essex Property Trust. This is a real estate investment trust. So that one had been negative in the portfolio. I think it would positive the past week, but then ended negative this past week. So overall, another opportunity to invest, and it is going ex-dividend here soon, which we'll take a look at. So now that we've kind of seen our activity for this past week, along with the dividends for the month, this is where I've been kind of tracking everything. I just went through this right now prior and updated this besides the cash balance. I think that's the only thing that's thrown off here. And there we go. So this is all accurate as of now. So our total value should be 24,909. Okay, so something's still slightly off there. I think my dividends paid is slightly off, and I have to update that because I haven't gone through and actually updated that. I have to go through and update that. Okay, so I didn't update it all the way, but really close. All the other companies are updated. I put in what stocks I recently purchased down here, with this, which is Essex Property Trust, and I put in all the dividends that we've made here in September, starting with Pfizer up at the top, and all the way down to Avery Dennison here at 274. So total for the month of September, with about a 1.5 week remaining, we have made $80.47 from this portfolio. So if you guys are getting an idea of how long it'll take to generate roughly $100 of dividends, we've been working at this for a little over 2 years, a little under 3 years now. So in January, we'll hit 3 years. We've put in our base investment is $22,296. So if you go here to our funding history, this is actually $6,000. M1 Finance just doesn't want to fix it. So here is $17,000 plus our current $52.96 there. And if you add that all together, it is $22,296.59 total. That is our base investment that our capital has purchased, and then our actual, our cost that all of our stocks have been purchased with is $23,897.01 there. So that kind of showcases, let's go ahead and we'll take this number here and subtract our base investment 292. What am I doing here? 22,296.59. So we have an additional $1,600.42 that have been paid to us in dividends, reinvested, and those dividends that were reinvested had dividends paid by those shares that had been purchased with the dividend capital. So here's our snowball effect of what is kind of going on. Our base investment plus this additional $1,600 has helped us get this additional cost basis up, and we've definitely got more shares added to our portfolio than if we were investing in, say, growth companies that don't pay out a dividend. So that's kind of nice here with the dividend style portfolio. Our portfolio annual income is roughly $947.48, and it offers roughly a 4.25% yield based on our cost basis of our original cost and our current value. So that's where we are at with the portfolio overall. Now, as far as what stocks we're planning to buy this week, this is, I use Seeking Alpha to kind of find out. I like to buy positions that are in the negative at the moment, plus are coming up on X dividend date. That way I can get kill two birds with one stone. I get both the averaging down of a company, I lower my unit cost, I increase my yield on cost, I also increase my future dividend income, plus I take advantage of the X dividend coming up, meaning that I also get a nice payout here in the near future by doing this. So here we are currently on, I believe it was the 21st. So if we take a look back here, we have a few companies here that are going X dividend here towards the end of September with WP Carey. That's one of our positive position. Essex Property Trust was not positive. So let's go ahead and sort this by our worst performers down here, and Essex Property Trust is there at negative 7.79, so still in the negative. It is coming up on X dividend. WP Carey is right up here at 8.38, so it's basically opposites here. We have Realty Income, that's a really good performer right now. Cardinal Health, I believe that one's performing decently. Okay, it must be up towards the top then, because it's not towards the bottom. I didn't see it right away. Okay, so I have to do a control and find that one. And it's barely there in the positive by 0.19. Okay, so I'm just going to go ahead and leave it right there. We have Cardinal Health, that one jumped up into the positive. ABM Industries, Cisco. So the 1st of October is next Thursday. So I have the opportunity to buy Essex Property Trust today on the 21st and next week before the 29th. On Tuesday next week is the 29th, so I could buy Essex Property Trust this week and next week and still get it for the X dividend. I could also do the same with Cardinal Health. Cardinal Health is actually in the positive. I'm not too worried about that. I think Cisco Systems, not Cisco Systems, but the food company, I don't know why I'm not able to find what I'm looking for here. SYY. Okay, Cisco Corporation is up by 47%. This one I didn't get as much invested into it as I would have liked. It was definitely beat up at the time when I started averaging into it, and it definitely shot up to the upside a lot faster than I had hoped. So that's too bad. Cisco Systems, that's another one here. Kind of interested in. It is negative by 1.40%. It was actually one of my best performers for quite a while, but they're doing a big transition with their hardware, which they're doing a lot of licensing changes, which is really hurting their business, I feel. We actually moved out of Cisco. We're completely removing Cisco from our shops. We have like 25 branches located throughout Oregon, and we had primarily used Cisco for our switches, our routers, our firewalls, and all of our other defensive systems. And the way that they're doing their licensing just kind of messed that up for them. So that was all removed. We'll see how that one kind of plays out in the portfolio. I don't think they're going to be doing too well in the future as other companies are kind of up and coming. So I think I'm going to go ahead and stick with Essex Property Trust. This one is down by 7.79%. I think I'm getting a really good deal for this one, especially at the current time frame. It is offering a trailing yield of around 3.87, 3.93. My actual sheet here is showing a 3.93% starting yield. My actual yield is 3.62, so I'll be definitely averaging up. This one is going to pay out $5.82 if I don't add more to it, but I definitely want to add more. I want to get this position at least to $900 would be nice for the Essex Property Trust. Most of my big positions max out at about $1,000. And then I kind of stop putting more equity into them until a later time. So we can kind of see our cost basis here. With our losers are definitely pretty high because our winners have just been winning and they don't stop. They don't stop winning. Sometimes they come down, such as Cisco, and then we'll buy more, but we'll kind of give that one a little bit of room. So in today's video, we're going to go ahead and make the buy here for Essex Property Trust. So we'll jump back to our portfolio and we'll go ahead and type in ESS. This will locate Essex Property Trust. And we're going to go ahead and buy $86.50 worth of this stock. Continue and confirm. And that is it. I could have split up between Essex Property Trust and what was the other one coming up on ex-dividend that was negative? Was it Cisco? Cisco is down and it's coming up on ex-dividend on the 1st of October. But I think there's more room for Cisco to go down versus Essex Property Trust. We'll kind of take a look at this in this future week. What do both of these companies do this following week? If Essex Property Trust continues to fall, this could be another opportunity to buy more. But if Cisco falls a bit more further into the negative, Cisco is offering a 1.48% discount from where I purchased it, whereas Essex Property Trust is offering a 7.79% discount, and it's still a really great business model. So I think that is going to be it for that one. So if you guys did enjoy it, of course, give it a thumbs up. If you guys are brand new to the channel, have not yet subscribed, definitely go down below, hit the red button to make it gray, hit the bell to be notified every time we release a brand new video, hit the thumbs up to make it blue, and of course, drop me a comment letting me know what stocks you're planning on buying this week. Are you pretty excited for the market being red? Let's go jump back over here, hit refresh. Oh yeah, it's definitely escalating since we've started recording. When we started recording, this was at -1. It is now at -1.5. So this is a really good buying opportunity where we're going to be able to buy here on Monday in the market, early market hours on M1 Finance, and the whole market's going to be down. So it's a really good opportunity to buy. So that is going to be it for today's video. Thank you all for tuning in. Really appreciate it. And I will see you in the next video. Bye-bye.